So you have been asked to prepare all three reports, guys. Right? So cash flow statement, income statement, and balance sheet. As I told you, in VCE, I don't know about the SACS. VCE, you won't be asked all three reports fully, but the maximum that has come to VCE so far, cash flow statement, income statement, and balance sheet extracts. Okay. So in your SAC, your teachers can give you, all three reports. That I don't know. However, we are going to do all three reports, right? So how do we do the reports, guys? Together, yes, not one by one, right? At school, you might be doing one by one, but you don't have to do one by one, wasting your time, right? So the other thing is, guys, on top of those three reports, what else do we need to do? Two ledger accounts. Yep, inventory and GST clearing, right? Shall we start? Okay. Right, so we'll do it together, everybody, please. Right? Okay. So this business is starting 1st of May 26 and provided the following estimates for its first month of operation. Right? So that means we know, of course, as we read the question, we are preparing it for all the reports as of when. Just for 1 month, income and cash flow statements, balance sheet as of 31st May. Right? Then owner is making a capital contribution of 20,000 to commence operations. So which reports are we going to report, guys? Which reports? Cash flow statement and balance sheet. Okay, we'll do it. So in financing, capital contribution, 20,000, right? Then balance sheet under the owner's equity, right? Next one, shelving worth of 6,000 plus GST will be purchased using cash. Yeah, where are we reporting? Sorry?
Would it be the balance sheet capital?
Yeah.
Would it be capital and capital?
Capital either way is fine.
But
That's fine.
after the balance capital, like, isn't it involve profit loss summary?
No, there is no profit and loss summary. Why? That's why I said, what is it? This one is, yeah, it is starting operations.
Yeah.
It's a new business. So then there is no profit and loss summary or anything. Yeah, are you talking about the capital opening balance?
Yeah.
Yeah, we don't have an opening balance capital. Why? This is a new business, right? It's brand new. Then, guys, shelving worth of 6,000 plus GST. Where do we report? Investing. Yep. Purchase of shelving, 6,000. Now, before I forget it, we had reported somewhere else. Another one. What is it? GST paid, yes. So I'll start somewhere here, right? GST paid. Yeah. Yeah, you can do. That's fine. GST paid. Right. So I will start, open up brackets. Why? Because we are going to come across more items. Right? 600 plus. So 10% of 6,000, done. And then you go to the balance sheet, shelving, 6,000, right? And also remember, guys, I told you we are preparing the GST as well. Ledger account, debit or credit? Sorry, debit. Why? non-current assets, so what happens to GST? Debit. Why? Liability decreases. What's the date, guys? The date? May? May 1st. Actually, we don't know. They haven't given the date, right? I haven't given a date. It's May 31st, the last day. We don't know, right? So we'll put the last day. Why? Can you see any date there? No.
Did you just say May? Or do you have the right?
No, you had to write the date, yes. So for budgeting, guys, you can put the last day of the period, right? If you don't know the exact date, put the last date. So then I'm going to say bank here. Within brackets, I'm going to say, but you don't have to really worry about the bracket part. Just for your information, right? I'm writing shelving, right? You don't have to do it in the exam, but just for your information, I'm just writing shelving. Okay, right, next one. Cash sales are estimated to be 15,000 plus GST. Where are we going to report it? Cash flow statement? Income statement. Okay. Right, so this one I'm going to say inflows. Cash sales, 15,000. And there's another one. What is it?
Receipt from the account group.
No,
GST.
GST received 1,500. And then cash sales we are going to report in the, yep. $15,000. Where else, guys, are we going to report?
GST clearing.
GST clearing, debit, credit. Credit, why?
Increase.
GST liability increases. The date,
No, thank you.
31st. Bank, right? This is cash sales. Yeah, 1,500. Inventory, not yet. Why? Why inventory? Sorry?
Because we have to do it about. We have to do it about.
Yes, because inventory, how do we record it? Now can we record it? How much? Yes. Sorry? Yeah, markup is given, but we will come across in the future. Okay? We'll wait. Next one, guys. So the first 4, 1, 2, 3, done. Credit sales are estimated to be 13,200 plus GST. Sorry, including GST. So how much is credit sales? 12,000. Accounts receivable owing at the end of May is 3,500. Meaning, this is from accounts receivable. How much? 9,700. Yeah. So receipts from accounts receivable. Sorry. Yeah. Yeah, you don't have to ask me. You can go.
Add all the for the revenues, for the cash inputs.
For the, sorry, I didn't get you.
This add
26,200.
No.
For which one?
No, cash input. We need to quickly do it now.
I didn't get you.
No, he's saying
all the cash.
The inflows. Yeah. We'll wait, right? We'll wait because we don't know. There can be some items. The only one that we might get is probably some interest revenue or something. We'll see. Right. Then, guys, in the income statement, it says 12,000. Anything else? Anywhere else?
Usually
GST clearing, debit, credit. Now you guys can recall the double entry for the credit sales, yes? We are going to 1200, yes? Accounts receivable. Right? Yeah. You can recall the double entry for credit sales. Yes, JD, what's the double entry for credit sales?
or accounts receivable, debit, sales credit, GST credit, inventory credit, cost of sales debit.
So the sales and the selling price, inventory and cost of sales at the cost price. Yeah, good. Right. Anything else, guys? We are reporting from that bullet point. Anything else? Yeah. Accounts receivable. How much? 3,500. Yes, as I remember. Now, see, you should be able to remember the values. I don't memorize the numbers, but automatically, you remember when you practice. That's the beauty of practicing, right? Okay, guys. Anything else from this one? No, nothing. Then this is done. Right. Bullet number 5. All inventory will be purchased on credit. Purchases for May is 40,000 plus GST. At the end of May, it is anticipated that 12,000 will be owed to accounts payable. So what are the information that we can create from there? Payments to accounts receivable? No, we don't pay to accounts receivable. Do we pay to accounts receivable?
No.
Payable, how much? 2,000. Any other values? Why is it at 2,000, Alison? Yeah, GST, including GST and purchases of inventory, 44. Take away 12 is 32. So that means payments to accounts payable is, yep. All right, here. Outflows. Payments to accounts payable. How much? 32,000. I'll put this one within brackets. If you write here less outflows, you can't put brackets. Okay, you can't do both. Either way. So I would use brackets. Right? Right. Any other things that we are going to report from here? Credit sales, purchase of inventory. Okay. Debit or credit. Christian, what's the double entry for purchase of inventory on credit?
Inventory debited and accounts payable is credited.
Great. Any others? Hannah, do you know the double entry for purchase of inventory on credit? Ponara? No. Sana? Credit, yeah. So you forgot GST, question. Okay, guys, now you should be really fluent in those double entries, right? We've been doing for a while. All right, inventory. You debit. How much? Debit inventory, how much? May 31st. Sorry? How much? Tell me. How much do you debit in inventory? 40,000. Saying accounts payable. Right. Then GST. GST 4,000 debit because our GST clearing is decreasing. Accounts payable, I'm not going to worry about the date because date is already there. You don't have to repeat.
Each one.
No. Only if it changes. But the general journal you'll have to do. Right. Anything else we report?
Yeah.
Sorry?
Yeah.
What?
Accounts payable.
Yeah. Balance sheet, current, liabilities. How much? 12,000. Okay, guys, next one. Nothing goes to income statement from that. So this is also done. Next one. All sales will be marked up by 50%. And inventory loss is 500. All right. Meaning, guys, how much is the cost of sales? 18,000. Yeah. Any other answers? Cost of sales. Yes, 18,000. Yes. How did you get it? Yeah. So this one is less. I don't think we have sales returns. Cost of goods sold is cost of sales. And there was no anything for the buying expenses. 18,000. Everyone is okay with the 18,000, guys? How did you get it? Yep. So selling sales is 27,000, which is equivalent to 150%. Yes. Why? Because the markup is 50%. So then you divide this one by 150% to calculate 1%, and then this is equal to 1%. Then you need 100%, which is the cost of sales. It's 2/3. Yeah, 18K. Okay. Do we report it anywhere else? 18,000? Inventory. Yeah. Inventory. Yeah. Go to the ledger account. Debit, credit. Credit. Cost of sales. 18,000.
Wait, you together.
Sorry.
You don't all of it together.
Yep. Yeah. We can report separately as well. We'll do separate. Right? So separately, guys, what is it? 15,000 means 10,000. And the other one was 12,000, yes? 8,000. Sorry?
What you do separate.
Because they are for credit and cash sales.
So it's still saying inventory, so it doesn't matter.
Yeah, but it will be going from two separate entries. So you can do it together or separately, doesn't matter. Because they have given separately, we'll better to record separately. But in the income statement, yes, we can do it together. Okay. Right. Then next one, guys.
What about inventory loss?
Inventory loss is also there. Inventory loss 500 days. Where do we report? Income statement. Uh, so in the income statement, inventory loss 500. And the inventory ledger account credit 500. Saying inventory loss. Right? Yeah, then next one is, guys, 6 months advertising will be paid in advance, 1st of May 26. Cost is 1200 plus GST. There is no any other prepaid or accrued. Right. What shall we do for this? Cash flow 1200. What is it? Prepaid advertising 1200. Anything else? GST 120. Right. In the income statement, less other expenses. Yep. How much? Advertising, yes. Advertising expense. How much? 1200. Yeah. Yep. Any other answers?
Wait.
Yeah.
Wait, no, it's split.
1200. Sorry.
No, it's not 1200. It's 200. Yeah.
Otherwise, you just say yes.
I say
You said yes. Everybody said yes. Yeah. First you said yes. And 200. Yes. Not 1200, guys. Why? It's for 6 months. It's for 6 months. Then the other problem, it doesn't say like when it is starting. Yeah. Now, how do you know it is 200? So then, because it is not mentioning any other date in terms of the starting point, so we go to assume it is starting from 1st of May. Okay. Right. Then 1. Anything else? Current asset. Current asset. Prepaid. Advertising. How much? 1000. Because 1200 take away 200. Only 1000, guys.
You have that to your GP paid as well.
GST, yes. I already added 120. And also GST clearing. So 120. Same bank. This is coming from prepaid advertising. Okay. Right. Next one, guys. So this is done as well. Following expenses will be incurred during May. Wages 2,000. Depreciation of shelving 50. And rent is 1,000. Right?
So.
Yeah.
So this one we don't know if it has been paid or not. It says in only incurred. So how do you know if it has been paid?
What we can.
No prepayment or accrual. Let's see. No prepayment or accrual. So that means don't worry. They should have been duly paid. Okay. Then firstly we'll start with wages. Wages 2,000. Depreciation, where is it? Operations or investing? No.
It's not in there. You put cash flow.
Yes. Why not? Yeah. It's non-cash. Yes. Right. Then we have rent. Is 1,000. Then GST 100. Only for the rent. GST paid is 100 only for the rent. Done? Are we going to report in the income statement, guys?
Yeah.
Yes. Which one? Wages and rent only. Wages 2,000. Rent 1,000. That's it.
Yeah.
Then
Yes, yeah.
that's it.
No.
No. Depreciation. Depreciation of shelving 50. Right. Then inventory no. GST. Yes. You debit saying what? 100, which is the rent, the GST on the rent. Yep. Okay, then guys, non-current assets, what do we report? Less accumulated.
Material.
What's it called?
Yes.
50.
Material.
Yes, but still, yeah, this is, I think, material enough. Jalip, 5950. This one? Yeah, but annually it is 10%, yes. Yeah, we have to do it. This one. Okay, guys, 5950. That's it, I think. And then this is done as well. Yeah, the last two. 31st May, a loan for 35,000 will be received from ZNA Bank. Loan will be used to purchase a van in June. Right? So 35,000. Where do we report? Yep. 35,000. Financing. Right? Then what else? The loan will be used to purchase a van in June. So then not interested, June. Each month 400 will be paid off the principal starting on 30th June. Then again not interested, but also there is an interest. What is the interest? Not the interest on the loan. We are interested about, sorry?
So does the interest for us go on mean like the borrower had the
Cost of borrowing, yes. Interest means the cost of borrowing.
cost of borrowing changes?
Monetary policy, yes.
And like with most loans, do you have to pay interest upfront or
Yes. Nothing is free, especially in Australia.
except for like hospital bill?
Hospital also we have to pay. I mean, we don't pay the bill, but we have to pay Medicare levy, 2% on your earnings.
Talking about the bill,
Yes, bill you don't,
the bill you don't pay.
unless you go to a private hospital. Bulk billing means you get free for the GP.
But it's not 100% guaranteed.
No, usually bulk billing means you don't have to pay.
Yeah, I mean, like bulk billing is not much guaranteed everywhere.
Yes, yes. Okay, guys. Yeah, now 500. Yeah, why 500? What are we going to do with this 500? Nothing?
Balance sheet.
Balance sheet. For
No current.
current and non-current. How much?
5,500.
5,500? Not 6,000? 500 times, isn't it 500 times by 12? No, why not?
That's a 500.
Yeah, because you are starting, guys, from 30th June.
I want my glasses.
So that means only, what is it? 11. 5,500, not 12. Is it clear?
Yeah.
Yeah. Right. Yep. 5,500. So no interest. So loan was 35,000 or something. Next one. Cash drawings 1,900. Inventory drawings 300. Where do we report it, guys? Sorry. Cash flow, inventory and balance sheet. Cash drawings. Drawings how much? Total 2,200? No, only the cash part 1,900. And then
6 months.
drawings 300, inventory, right? And then, guys, this one we had to report minus drawings. How much is drawings? 20, 200. No brackets. Drawings. Cash and inventory.
How much was the
300. Right?
You're allowed to write the brackets in the minus sign when
No, not only in the cash flow.
yeah. But for the rest of the drawing, you have some balance sheet,
Yeah, no.
then so you have to say less.
less so, you can put the minus sign there within brackets.
Oh, wait, you can put the minus.
Yeah, yeah.
Oh,
I mean, not for the amount.
yeah, not for the amount, but like, you put a minus sign and then the element, you can do it.
Okay, guys, then that's it. Done. So matter of simplifying.
$26,200.
26,200. Our GST paid we had to add 820.
Sometimes. Sometimes what you can see.
37,020. And then net cash flows from operations.
Give us
10,820 negative. Purchase of shelling also should have been in brackets. So net cash flows 6,000 again. Negative. Capital contribution.
Was it influence? You.
53,100. Then net increase or decrease in cash position, guys. I'm going to simplify all these green ones.
Would you explain it from?
It was small. I'm sorry. Business here. Once, that's the license business towards the end. Yeah, I'll pull up in that. That I can't. It's on 5 years. It's not like that was like a feature. No, I think it's.
Different? Yeah.
Yeah. That's huh? That's some.
62,480. Net increase, or did you get, guys? This is correct?
No,
Correct? Right. Then bank balance at the start? 0. Sure? Negative 4,000. Yes. Why is it 0? Yeah, because we just started, guys. There is no bank balance at the start. So bank balance at the end is going to be the same. Then what do we do with this 36,280? What do we do with this? Balance sheet 36,280. Bank.
What's cheaper? Yeah, money. But no,
Then, guys, we have to deal with the income statement. We didn't have any sales returns. Gross profit is 9,000. Adjusted gross profit. $8,500. Other expenses. 3,250. And then net profit.
You're not wrong now. You know what to do, right? You don't put all that in. That's like, you don't know what to do. Not confused. Or
5,250. Yep. 5 to 50 is correct. Right, then we'll have to balance the inventory account, guys. 40,000. 40,000. Then the balance 0, 0, 2, 1, 21,200.
Yeah.
Then inventory balance, we are going to report in the balance sheet. 21,200. Okay, 21,200. And then GST clearing.
Oh, GT here, no, that's fine.
4820. 4820. 0. Oh, it's wrong.
Yeah, that's fine.
2120. Balance.
That's a 600.
Where do we report this one, guys? Balance sheet in? Sorry? Current asset. Why is it current asset? Yes, because it's a debit balance. Yes. So we have paid more GST than what we have received during this period. 2120. GST. Clearing, yes. Is that how you reported at the school, guys? Yeah. You don't call GST receivable, GST clearing.
Last year.
Then we had to add the profit, 5250. So add net profit, 5250.
Oh, yes, okay. He's watching all the videos.
25,250. Then
Oh, we do watch the income statement. Oh. Income statement.
23,050 is the capital at the end. $70,050. 17,500 here. Yeah, balance into 70,050, guys. Yep. Done. How do you find this? Too easy, yes? Right. I'll give you another too easy one, Dedi. Yeah. What time? Good time. We'll see.
Normally we have them 6 o'clock for some.
Don't. I'll give you the fruit time when I give it to you. Don't think about the full time now. This is working time. You have to be focused on the working.
I know, I am focused on it.
So then don't worry about the full time. I'll give you. Right?
Yeah. Sorry, sir.
Yeah.
I won't think about full time anymore. Sir,
Yeah.
I won't think about full time anymore.
Yeah.
Thank you.
See, when you remind the full time, people go out. Go, yeah. Huh? You spoil them, yes?
I'm not spoiling them. I'm not spoiling Punala.
Alright, guys. Then part C. Part C. Yep. Two reasons why the budgeted net increase in cash position is larger than the budgeted net profit, much larger than the net profit. Capital contribution and loan.
What's the growth?
What? Wait, where's Catherine? Is it Catherine? Yeah, absolutely. You should get on desk.
Sir.
Yeah.
Oh, please, I didn't influence Punala, I promise. She went on her own.
Yep.
Was that
So-
your doctor?
Capital contribution. And loan received. Any other things? Any other reasons? Hmm?
Oh.
Anything else? Advertising? No. That's the opposite.
Oh, yeah.
Payments to cash payable more than cost myself.
Payments to accounts payable against the cost of sales. Yes. No, it's the also opposite. Pranav. Sorry? Credit sales and? Yeah, if you are saying credit sales, and what is it? You have to compare it with the corresponding entry for that in the cash flow. What is it? Credit sales and receipts from accounts receivable. So credit sales is 12,000. Receipts from accounts receivable 9,700. No, that's not going to no. It's the opposite again. Anything else, guys?
Wait, what is the payments, but receipts from accounts receivable greater than?
No, it's lower.
Oh, I don't know. Oh, yes, the receipt is eligible.
GST received. No, that's also opposite. Why? Because GST paid is much higher. That reduces the cash. But now what has happened? Cash impact is higher. So no, then GST not wrong. Why? Because you have to compare GST paid and received.
18, 21. Oh, yeah, go ahead. 18.
Too easy, yep. Ready? Yes, depreciation is correct. What else? Cash sales is sorry? Not included where? Is included.
Oh,
Come on, JD. You didn't include cash sale in the income statement? No, you already said.
inventory loss.
Inventory loss and what is it? Depreciation. Yeah, however, guys, you need only two I have given you 4. Right. Then guys, part G. Part F, sorry. Or is it part G second? Or maybe because of spacing. Yeah. Where do part F, guys? Sorry? Yeah. Part, yeah, we can do it. No problem. Yeah. Part F, guys, what do we have to do? Modeling. Yeah, we need to do modeling, yes? Yeah. Modeling. What modeling? Yeah, only finance modeling, not any other modeling.
I think
Right.
very much tomorrow.
Yeah, modeling. Right. Budgeted income statement. To model the effect on the net profit if sales were marked up by 100% and 150%. Right? Shall we mark it up by 100 and 150%? Right. Yeah, earlier guys, we didn't have this modeling thing, right? I've been tutoring just for VC now. This is my 15th year, right? I've been tutoring from your first batch at Nosal. Now, who are they now? Maybe uncles and aunties, right? Okay, so now, sorry.
Yeah, you want to just teachers and things.
No.
Right.
Okay, listen, guys. Now, listen. Yeah. So for VCE in the past, now actually, I've been tutoring for about 4 or 5 study designs now.
6, 7.
Not 6, 7. This one we didn't have these things before. Now we have modeling. Right. So you probably, if you have gone through the VC papers, you might have seen. Right. So however, it's not a big deal.
It was like last year.
Common sense. Last year there was, yeah. So yeah, it's not a big deal. If you did accounting in the uni, yeah, you do a lot of these things. Right. However, guys, this is straightforward. Right. Revenue. We have cash sales. How much was cash sales, guys? 15,000. Credit sales was 12, yes. Yeah.
It should be 20,000 and 16,000.
No, then we are going to calculate the cost of sales. Yeah, cost of sales.
Cost of sales changed, but wait, what's changing? Why is it cost of sales?
Yeah, cost of sales is changing.
Why not
Why cash sales? Why? Because our cash sales, yeah. Yeah. What about then cost? Same. Basically, what we have been given is sales. So then we are changing the cost of sales. Yep. No. So this one is 27,000. Yeah. What we were given is the sales. So we calculated. Yeah. Then okay. Yeah, that's a valid question. So now when they ask us, look at this, guys. Yeah, some people could do it differently. So this one, to model the effect on the net profit if sales were marked up by 100% and 150%. So what were we given, guys? Sales and cost of sales. Yep. 15,000 and how much? 12,000. Then we are say there. Then we were said that they were marked up by 50%. So then, which one comes secondary? Cost of sales. Right? Cost of sales. So then cost of sales is what we are going to change. Right? Not the sales. Don't do the opposite. So don't take the cost of sales and then don't project the sales. It's the opposite. Right? Why? Because sales was the original one, not the cost of sales. So how much is cost of sales here, guys? 24,000 cost of sales? No. 13,500?
Oh, my bad. My bad. I shouldn't have you. I was.
13,500, yep. Then then we had inventory losses, 300 or 500, yes? Minus inventory loss.
And
13,000. Then other expenses, guys, we have to change. What are the things that we need to change? Oh no, we don't have to model any wages or anything up. Only the cost of sales. Sometimes we'll have to model wages and so on. We don't have to really worry about them. Yep. Advertising, rent, expense, also. Depreciation, 50, and then wages, 200. Singing,
How much below county?
tourism. 1,000 for 50? No. Sorry, wages is 2,000. 3 to 50. Yeah, then how much is cost of sales here, guys? Sorry? 10,800?
Yeah, 10,000. Did you see the last week? Yeah, 10,100. They didn't take the buys. You'll do what you say. This one's new shapes. We're gonna know what you see.
Like they had to fight at the White House.
10,800? And then 16,200? Inventory loss is 500.
Still comes to that week, so.
So it's
Or again. Divided by 4, and then times 2. Yeah.
moving slow more than
Just divided by 2. Just shows if the time says on something you speak of.
Yeah, 12,450, guys.
Well, we have to go to country, so it's being having something there. I'm sure these own grass, all the nice people. I'm not only going to have this block, but it's just. You should.
Done. Everyone done with this part F. Yeah, any questions with this? Yeah, in the exam, guys, I mean, when we do some other questions, and especially when we practice them, we might have some other expenses changing, right? Such as wages, maybe advertising, inventory loss, they will change according to the sales, right? So maybe it would be modeled in a different way, however they are same. So then we have to identify the impact on the net and also gift flow. Any questions? Part G. Explain one reason why the modeling in your answer to part F may be inaccurate. Why do you think our modeling can be inaccurate?
But reason where, looking the markup, I might reduce sales.
Might reduce sales. Why?
Right, because purpose sometimes this is actually for higher prices, might go to.
Yeah, so when we, yeah, when the customers are going to pay for the same product, a higher price, they may not be attractive, right? So then they would go and find some alternatives, right? Substitutes. So then our sales may not be as what we have projected. So then it can change. However, still we can do it. Yes, Arvind. We can still apply the same markup. How can we apply the same markup? I mean, higher cheaper supply.
I maintain good.
Yes, but without compromising the quality, right? So same quality. Otherwise we'll have what ethical issues. You guys have the ethical tute with you? We might do it at any time, okay? I have given you have it? I have given this? Yeah. Ethical tute. I'll give it to her. Like I have some spare copies. I don't have for everybody. Yeah. When are we starting our revision for the balance day?
Are we done?
The balance day this month?
No, you know, 6 weeks. That's actually
a while, bro.
Yeah, week 7 or week 6. Oh, no, week 6.
It's weeks. Yeah, weeks.
It's still like.
Week 6 means in August.
Yeah, August.
It's too late, yes.
Yeah, very just like.
It's like August.
I think
It's like 3 months.
It's August 18th, I think.
no, Excel one is on the budget.
Because 3
Wait,
months.
I know. It's on Excel now.
No.
No,
It's the budgeting one.
The extra one is on first week,
Yeah, four.
last week.
So that is in October.
Yeah.
Yeah.
weeks before.
How much of budget we have now?
Now you're in
No more.
Is that now we have to do graphs and things?
No, not bad.
Stick for it.
Okay, guys.
Excel by between.
Yeah, as I know existent stuff.
I remember put out the one side.
I still have no idea what you want.
No.
When we do what spreadsheets as well. No. Sometimes I think that's. No, they do it on. It's still keep it back.
So you pulled up for me.
Right.
Yeah.
Oh, and you use this one, you better like this.
Electronics and then.
Electronics is-
I begged her not to make me.
I don't know the time. The kind of work you done. Like, I don't see it fine, but- Peaceful. Open sky. They were the future.
It's like it's that, yes.
That is passing alien and spread. See, alien and spread actually.
I some big games in FIFA.
I give it to my and I'm back, and I don't from like long plus. So it's all.
Most focus is on that.
Yeah, I know substance and substitutes of make a sequence.
You got what?
Substance instead of substitutes.
And tells me question mark and like it's just as base.
Yeah. Now you change the box with the down.
Well, because we're at socks.
So would you like with atomic bombs blast next door?
Sure.
How
What would you actually?
you got 20 You wouldn't notice it.
No.
What's up? Sir, sir,
What's it say?
sir. What's that
What
word?
is all of these guys?
Sustain, is it sustain?
Yeah, substitutes.
Before
Substitutes, what's the word?
Switch.
Come on, switch for my book. But then bro, I need it for my demo.
Who the bike is coming?
I'm resident with you.
That's what I'm saying. That's what I'm saying. When I'm sitting here, why do you think I can't do it?
Okay, guys, if you are done with this, you can start question 2.
I was
Stick with.
No, not some. You even came late.
Huh?
You came late, yeah?
You didn't come that late, sir.
Go to Sunday.
School on Sunday?
Go to Sunday.
Okay.
What did you do? What's that? What do you think?
It's Sunday.
Accounts reconstruction, guys. So this is the last time that we come across the double entries. Theoretical. Doesn't mean that you can get away with the double entries in the exam. The last time we come across the double entries. Right? Now, you guys, can you stop your class?
Question.
Right?
Focus on values.
Right. So this one doesn't have much theory, just some steps, right? So this is the same thing, guys, that we been learning so far, right? Since unit 3, right? Reconstruction in the sense we will have, I mean, it is it is not the normal or the traditional method that we've been doing in ledger accounts. We are going to do, because what is the traditional method means? We are given the opening balance and then we are given set of transactions. And then at the end, we found the closing balance. But this one, you will be given the opening and closing balances and some other information, and you have to find another information or some details that is missing. Right? Okay, let's do the notes, guys. Firstly, not much. Few lines.
When do we do it? Well, why do we do it?
Cross reconstruction. So that basically, yeah, good question. We are going to calculate usually the cash transactions. How much has been received or paid in cash. So again, that's why we are doing it in budgeting. Mainly, we do it in budgeted cash flow statement. Sometimes opposite also can come, meaning for the income statement. So usually we will find the cash outcome. Otherwise, we will find the income statement outcome, meaning the revenue or the expense earned or incurred.
How would a business know the closing balance without like the transaction?
Yeah, so balances, closing balance, yeah, that is an estimation.
Like they have like some papers with income.
So the closing balance is going to be an estimation.
What if they like what if it broke apart, but they only had like the balance? And they like spilled ink on the rest.
Oh, what?
Income, sorry?
I would like make a scenario where
Very unique.
they like spilled ink
Big symbol.
on most of the ledger, but they had the balance. So
Get out. Get out.
No, I didn't get you. You mean like they have only balances?
no, like they like broke the ledger.
Sorry?
They lost the less, like.
Lost.
But they only have the balances.
Yeah, they have only balance. They have all they what they have is only balances. Then it is hard. So it becomes basically, in maths also, what is it? If you find one pronumeral, what do you call it? What equations? Simple equation, yes. If you have two unknown variables, what do you call? Yeah, simultaneous equations. So then yeah, we are going to have some simultaneous equations. However, it's hard to find like many unknown variables. No. If they were given, if they were going to ask you two unknown, that means they have to give you again information for that. Otherwise, we can't.
Say business lost like a report or something, wouldn't they also be like reconstructed using
Yeah.
source documents like that?
Yeah.
So if something happens to any document, you can just use source document.
Yeah. If they have the balances, yeah.
No, makes sense. Okay. It was like fun, like you used to like asking questions. Yeah. Louis on me. I'm playing like I'm sleeping, but I shouldn't have been started.
This one.
Sometimes.
Basically,
Wait, should I please read you?
no. What do you think? But whose phone is it? But that's actually not doing any. That's actually just really broken.
Yeah, yes, hopefully good company.
So Steve Wilkins or there's no community brain organs. There's no point, nothing spoke numbers.
No,
I will know. You can stop. One case will just like maybe go through so what is it? I'm not.
wait, second, one up a bit.
Sorry.
Everybody said no ducks, double up the men, and then for that. And then it's go for that. We want to make it. if you do the most one person to each job on them, and then like even if you don't get a immediate cross connection, it's just like you just keep it out of possession.
Yeah, you're going to small whiteboard.
Or just take a long shot.
You want like small whiteboard.
Run.
Whiteboard, like a little board.
Run. Well, you check it, you check the fix. Huh? I'll take videos.
No, I'll take pictures.
I can check claims. No,
No, I think claims. I think claims.
he's taking claims. If you can research and
This guy's discussing.
but the second plan is actually the biggest issue.
Okay, guys. So what are we going to do? We identify the transactions or entries that are going to the ledger accounts, and then we will match and then complete the ledger account and then calculate the figures that are unknown, usually in the middle of the ledger account, right? Right. Now shall we start? Now this is, I have given actually a couple of worked example. We'll do them together. Right. So what you have been asked to do is reconstruct the ledger accounts and then calculate receipts from accounts receivable, cash payments to accounts payable, and GST received from cash sales. No? Right. 1st of Jan 26, King's Sportwear had accounts receivable 12,000 during, right. So shall we start with that 12,000 opening balance? January 1st, 26 balance. $12,000. Then during the year, credit sales were expected to be 88,000, including GST. What's the entry, guys? 88,000. What's the entry? Yep. Yep. Credit.
And then sales.
Debit. Yeah. 88,000. What's the date, guys? The days? Yes. December 31st, yes. Right. So we are going to say, what is it? Sales slash GST clearing. 88,000. Okay. Also, guys, now we have to do the GST as well. If you want, we can do that as well together. Right? Shall we do the GST also? The GST clearing payable, how much? 2,000. So start here. January 1st. Balance. Yeah. 2,000. GST clearing 2,000. Okay. Right. Next one, guys. Then we'll do the GST. What will happen to the GST here because of the sales? 8,000. Debit credit. Saying date December. December 31st. 8,000. Now, as we go, guys, I assume that you are okay with the double entries because these things, straightforward. If you have any question, tell me, okay? Otherwise, I would assume that I have a presumption that you all know, right? If you don't know, tell me. The next one, guys, sales returns 1,200 plus GST. So what's the entry? Whichever. So accounts receivable is credit. The date still December 31st. Sales returns slash GST clearing How much? 13? 1320? Right? GST? Debit? Saying accounts receivable? How much? 120? Okay, guys. Next one. Discount expense. 400. The entry. Credit. Saying accounts receivable. Accounts receivable is credited. 400 saying what? Discount expense. The date you don't have to worry. Why? It's the same thing. Same date. No GST for discount, guys. Then accounts receivable to be written off as bad debt, 1100. What's the double entry for that? Doubtful debt. As that's do you remember?
Double entry for allowance of alphabet, just.
Yeah, this one written off 1100.
I said debit. Income.
Sorry,
Bank.
debit bank, credit allowance for doubtful debt. Any other answers? Yes, Gutama, do you remember? No. Sana? No. Punana, do you remember? Yeah, 1100.
Debit becomes allowed in credit allowance.
So what is it?
Debit by the expense.
No, wait.
You know, Hannah, the double entry for 1100? Have you done at school? Christian? Double entry for 1100? No. Dom, do you remember?
Double entry. Well, it's actually allowance for doubtful debts and bad debt.
No, not bad. It's
Oh, the GST.
yes. Sorry, Varun.
And the allowance for doubtful debts, 1000. Then which is 31 million and then credit counts straight.
Now we have done doubtful debts, guys, for so long. Why still you can't remember? Yes.
Let's do it, right? It's it. It has a discount expense where it is, hasn't been received from accounts. See.
Discount expense has been sorry.
Received from accounts, see.
Yeah, we are receiving actually.
Well-
That's what we are going to calculate. That's what we are going to calculate. Yeah. Yeah, that's correct. We wouldn't have allowed discount without receiving money. That's correct. So that's the condition, yes. So we won't give discounts for the people who are not paying, yeah.
So we should give it back.
No, that's fine. That's fine. Don't worry about it. Yeah, as we come across the information, we'll keep on filling. Then, guys, 1100. What is it? You will say. Allowance for doubtful debts / GST clearing. 1100. Right. Are we going to deal with GST? GST? Yeah. Debit credit. Saying accounts receivable. Okay. Then, guys, next one. Accounts receivable was expected to be 15,000 at the end of the year. So what do we do with the 15,000, guys? balance. We will put it here, 15,000. Then we'll put it January 1st, 27 balance, 15,000. Now it's a matter of balancing. Yeah, debit side is greater, 100,000. So you repeat the same thing, 100,000. Sorry, I'm writing in the wrong place, guys. Should be after this one.
Is it eight to?
Well, you should say SPS on next on that. Go back on.
Right, then what we are getting here is 0.8.
81.
That's one check.
Wait, okay. Have you looked at the 24 account?
82, 180. What is this one?
Is it that the receipts and accounts?
This is from account receivable. Yes, what's it? Bank. Cross reference is bank. Why? So this is how much we are going to receive from accounts receivable. Right? So if you want, you can write here bank how much? 82, 180. Yeah, usually what do we write? Yes, pronoun. Usually we write bank slash discount expense, but now we do it separately.
Bless you.
No, you usually no. In the reconstruction, you don't have to do it together. Well, do it separately.
If you do it together,
You can't do it together. Because why? Otherwise, I mean, there are instances where we are going to do it together and then we will recalculate the discount. But in this case, because why? We have been given discount in the first instance, so then we will record it here. So we have already recorded. Then only we work out the cash receipts from accounts receivable.
Could we sometimes like using like if they say some discount expenses, or whatever?
Yes, that's what I said. So sometimes we are going to do it together. We'll do it. Right. Then next one, guys, accounts payable. The second paragraph. Accounts payable was 20,000. So what balance is it? Credit. January 1st. 20,000. Inventory purchases 50,000 plus GST. 80% of this would be on credit. So meaning how much? 5,000? No, 40,000. Sorry,
4,000.
4,000. 40,000. What is the double entry for 40,000, guys? Inventories, GST, and then accounts payable is created. How much? 40,000? No, 44. January to non-January. December 31st. What's the narration, guys? The cross-reference inventory slash GST clearing. Right. Any questions, Punara? Yeah. Then GST, what do we do? Debit. So debit the GST, guys. How much? 4,000. Saying accounts payable. What? Next one. Yep.
We also need the cash. Yeah.
We need the cash for the GST. So what is cash purchase of inventory? 10,000. So from 10,000, how much is it, guys? GST will be 1,000. Saying bank. If you are going to forget where you got it from, so you can say inventory in cash. Inventory in cash. Okay.
Let's return.
Then purchases returns 10,000 plus GST. So
Accounts payable debit 12,000.
accounts payable debit
Inventory.
11,000.
Inventory and GST clearing.
Inventory and GST clearing. Right. What's the double entry for purchase returns? Yes, remember? Not remember? Purchase return. Gutama, do you remember? Yeah, double entry.
Credit, accounts payable, accounts receivable,
No.
wait, accounts payable.
Accounts payable credit. No. Christian, do you remember? Double entry for purchase returns.
That just was it's.
No.
DSP
Errors.
debit,
Hmm?
GST credit and
Inventory credit. Yeah. Anything else? Yes. Is it correct, guys? Yeah. Accounts payable debit. Inventory and GST is credit. Yes, correct. So basically, guys, what is it? Opposite of purchase of inventory on credit, right? So the double entry reverse for the purchase of inventory on credit. So how much? 11,000, yes? No.
It's actually good.
I'm writing in the wrong place. 11,000 saying inventory slash GST clearing. GST clearing will be debited, sorry, credited, saying accounts payable. Okay. Next one, guys. Discount revenue was expected to be 5% of total settlement. This is where we are going to do it together. 31st December, accounts payable was expected to be 13,000. Right. 13,000, what do we do? Balance. We'll write it here. $13,000. Balance. So the debit side is, sorry, credit side is greater, 64,000. Then this is also 64,000. January 1st, 27 balance, 13,000. Right, now what is the story, guys? We are getting, now look at this. We are getting, don't write anything. What's the gap here? 40,000, yes? So what are they saying us? What I'm saying here is discount revenue was expected to be 5% of the total settlement to accounts payable. How much is a total settlement to accounts payable? 40,000. So from 40,000, yes? So yes, 5%, which is 2,000. Yeah, 2,000 will be, what is it? Discount revenue, right? So then, is it clear, guys? Yeah. So 40,000. So we are going to subdivide it. We'll do it separately because they're asking payments to cash, cash payment to accounts payable. So we'll do it separately. So 2,000, 38,000. So this one is bank, and this one is discount revenue. Leave it open. Okay. Any questions with this? Next one. So we'll write it here, guys. 38,000 is the cash payment to accounts payable. GST received from cash sales, right? So we had the opening opening GST balance, and total expenses incurred and paid are 50,000, including depreciation of 10,000. Why do they tell us about depreciation? Printing mistake. Huh? Why is it talking about depreciation? GST.
It thinks we want.
Yes. So this one, guys, total expenses incurred and paid, 50,000 means including depreciation. So then remainder is how much? Huh? Remainder is how much? 40,000. So that means for this 40,000, we have to pay GST, 10%. Yes, usually yes. Wages, yeah, without wages, because that's total expenses. Why it says depreciation is basically the remainder is, yes, GST, yeah.
Because the rule said like depreciation and wages.
Yes, yes. Right. So 10%, guys, 4,000.
Some expenses you don't pay GST like we.
Yes, some expenses. Yes, that's why. Otherwise, they would have included that as well. I mean, I would have included. Sometimes you will get in the questions saying general expenses. So still you have to pay GST, right? So how much? 4,000, yes? So you are going to do 4,000 here, same bank, GST on expenses.
But we have to put in, right?
No, I told you. You were talking at that time. Right. Then our closing balance is 5,000 payable. So payable is going to be a debit balance Debit closing balance 5,000. So which side is greater, guys? Debit side. 0 to 2, 14. 14 to 20, and then 3,220. Yes. So this one is, what is it? Bank. So this is the this is from cashiers.
Only this.
So if you want, you can write it here. 3,220. Any questions? Any questions, guys? Okay. Done.
No, is it? Is it? No.
Everyone done writing?
Yeah, one question. Yeah, one question. Why is this?
Wait, why can't I just make my plate, please?
Okay, done.
Right.
Done.
Yes, yes, sir. Yes, sir.
All right. Thank you. Then, guys, worked example 2. Have a look. Yes.
Chicago Bulls?
Analyzing the problem.
Where does it say Chicago Bulls?
Look at Texas.
His uncle's name.
Huh?
His Arvind.
Kindness, no.
Oh, yeah.
Put it into a book.
Uncle Bull, yeah. You like concrete fiber, that's what you want. You like run thinner. Wait, it's real.
Okay, guys, shall we start? Sorry? Yeah, anything.
Example.
Too easy? Yeah.
Do example, then you do first.
Yep. So inventory balance, guys, as of 1st of January, debit
This is the man.
10,000. 31st December, 12,000. So you will have you will have the closing balance from the credit side, December 31st. Balance 12,000.
You go right.
Then you have other transactions, credit purchases 20,000. What do we do with this 20,000, guys? Debit, credit 20,000. Debit, credit purchases. What's the double entry for credit purchases, Justin?
The inventory, credit account receivable. Credit bank, credit. No, just share bank, yeah.
If it is credit,
Oh.
Like just, you want to make a sense for this one?
Can't tell, bro.
It's for inventory.
Guys paying inventory, physical and nothing.
What? Metric. Am I the only one writing the words?
Yeah. What's the double entry? Punara, can you tell us double entry for credit purchases? Anna?
Inventory,
Oh.
usage, inventory, the
Stuff like
dividends,
Yeah.
and.
I'll just say Davis last time. It'll be like.
Credited, yeah. So inventory and GST debited. Accounts payable credited. So 20,000, December 31st, saying accounts payable, right? And then cash purchases,
No.
what's the double entry for cash purchase?
Inventory, GST and that.
Inventory debit or credit,
Yes.
15,000,
Which feels like that. Get it.
Yep.
Back, but.
bank. Then guys, sales returns, cost price is 3,000. Sales return cost price, what do we do with the 3,000? Debit inventory, sales returns,
Debit inventory.
debit inventory, 3,000.
Correct, office room.
Saying cost reference,
Yeah, so.
cost of sales, and then purchase returns 1,000. Purchase returns 1,000. So
Debit accounts receivable.
debit accounts receivable,
Debit accounts payable.
accounts payable, yeah. But purchase return, we haven't been given the cost price.
This one balance.
Sorry,
That's.
that is cost price? Sure. Yes.
Yeah, we do purchasing, but
So it's T6.
Sorry,
T6.
26,
No, tutorial 6.
tutorial 6. Okay, you remember? Good. So 1,000 guys. Purchase returns. So purchase returns is anyway at the cost price. December 31st. Saying what? What's the cost reference, guys? Accounts payable. Yeah, you can't put AP, okay? Right. Then inventory write down, guys.
Credit inventory 500.
Credit inventory 500. Saying inventory write down. Why do you have inventory write down? What are the reasons?
TV.
TV?
Both TV.
We broke the TV. No, broke the TV means like you can't sell it, not inventory. That is inventory loss.
The selling price of the inventory is the lowest cost.
Selling price is below the cost price. No, no. Why do we have inventory write down, guys? Yes. Yes.
No,
Technically, why would we have inventory write down? Sorry? Yes. Yes. So what is the why would we have inventory write down? What are the concepts involved with this one? NAV is below its cost price, yes, not the selling price.
They don't sell us for that.
So inventory gain, guys. Yeah. Debit credit, debit or credit. Inventory gain. Then inventory used for advertising. Debit credit. Saying advertising. 2,000, and then drawings also credit. Then it's a matter of balancing, guys. to calculate the cost of sales. 500, 9, 49,500, 49,500. And then we are getting 7 to 9, 0, 30,000 exactly. Cost of sales.
Yeah.
That's where you can use it.
Oh, it's 1,500.
Okay. Cost of sales 30,000 exactly. Any questions? Any questions? Right. Then guys, for the capital and disposal. Yes, so far in VC, what you have got, the hardest question for reconstruction is in relating to disposal. So we'll do it. It was in 2016, as I remember. Question number 5 or 6.
Was that just a test?
Yeah, in VC.
Bro, that's before we.
Before you were born,
Yeah, I think bond knowledge.
Oldest bro.
2015.
Why you
Oh,
click
16.
any other?
Yeah, 10 years ago, yeah.
Or 2007, or I think the 20.
10 years ago.
2007.
Actually, can
You were kind of problem? No. Yeah. Right. So 10 years ago, we'll do it. Of course, before you go to the exam. Because we are not going to, I don't think we have to do 2016 paper. However, it is a hard paper, 2016. We'll see if you want to do
Which
it.
company paper is that?
was in 2016.
It's not a company paper. We see.
Do we do any other company paper?
Yes, of course, Michael.
Wait, what are the companies?
Huh?
What are the companies?
Erangas company.
CPAP?
Yeah. We start from
Which
Erangas.
is the best one?
Based on Erangas.
After Ranga.
Yeah, we'll do
The TSS stuff.
PS. No, T is this, right?
No, yeah, that's what I'm asking, so we're not doing it.
What about
Yes.
Fernando's?
Yes.
Yeah, if you are going to provide financial, yeah, we'll
Yeah,
see.
what about Fernando's electric?
Yeah.
It's a Italian
Huh?
Italian company.
Yeah, maybe we'll do
I think.
PS.
And what about Fernando Electrical?
Done.
Yes.
PS and Insight.
Yes.
Yeah, except TSSMS.
Yeah.
If we have a better one for TSSM, we'll do. Otherwise,
Wait, are we going to do like past papers from different study designs?
yes, I will convert them into this.
NHD. Oh,
NHD, yes.
NHD.
NHD will do.
And actually, so
yeah, because that's combined.
so does B cover. It's enough. No one can.
Okay, guys.
See the kind of B cover.
Right. So capital. What are the items we are going to get in capital? Opening balance. Yep. Balance. If you want, we can put some random numbers. Otherwise, you don't have to worry about the numbers. Right. What are the other things we will get? Bank. What is bank? Capital contributions. Do you want me to write it here? Capital contribution. Right. And then any assets, maybe, vehicles. Yeah, we are making this one. I'm making up vehicle, maybe computer. Yep. Inventory, right? Then yes, P&L summary. That's going to be the profit. Right. This is the profit. 14,000. Well.
What money you made this month? Next.
Line.
What should we lines up?
Right. And then what do we have on the debit side, guys? What do you have debit side?
Yeah.
P&L summary, yes. This is the loss. I won't put value because we can't have both profit and loss at the same time. And then we will have this one. We will have bank, no. Inventory, no. Drawings. Bank and everything come through drawings.
Is that 15 that? Loan.
Loan, 15,000.
I remember that transaction. Remember that transaction. Yeah. Loan.
Yeah, then you can calculate the balance. Yep.
What else I learned? No, don't read that after this. I think it's. No, the cast. What is loan transfer? No.
Loan transfer.
It's when the owner like.
Ah, yes. Yes. Yes, correct. Loan. We can transfer loan. Yes.
Loan to the RBA.
Not from the RBA, from the vehicles or any other non-current assets.
I'm not funny when you put it. I think there's too much. But we can't throw like you didn't put money living in other fact it's like if you just put in a bank, you should I'm thinking that like I'm stupid. I'm like crazy.
Yeah, go.
Like
Yeah, we also can print money.
I thought if you just stop printing money, there'd be better things.
Yeah, we also can print money, but only once.
And then you go.
Yes, currency, yeah.
Yeah, this is one.
Which you want to do take currency. Yeah. That's it.
Yeah.
No,
Loan transfer means, remember, okay, listen guys, listen, loan transfer. She's asking what loan transfer is. What is loan transfer? Remember when we did the, what is it? Transferring entries, not transferring entries. Commencing entries. Remember commencing entries? That's where the business didn't have a proper double entry system, and then they are transferring or they are starting the double entry system for the first time in the business. Business was in operation, but they didn't have the double entry system. Then when they are coming into a proper double entry system, then what we do is we transfer all the balances and everything to the ledger accounts. Then sometimes owner might contribute non-current assets, for example, owner's car. So let's say car is worth of 20,000, and then also there is a loan for that. Let's say 15,000.
Yeah.
So both the car and the loan are transferred to the business at the same time.
Really?
Yes. Then what will happen? So what happens is effectively how much the owner is contributing is how much? 5,000. Why?
Yeah.
He or she is giving a car worth of 20,000 plus another liability, 15,000. Meaning net capital contributed is 5,000. So that's why we are having loan here. Huh?
It's not good for you. You go bring it again.
Perfect.
I don't think thanks for how one put through the back. Okay.
All right, guys. Disposal. What are we writing in the disposal?
Van.
This is disposal of van. Okay. Van. Debit 10,000, let's say. What else?
Accumulated.
Debit credit.
Credit.
What do you run like business?
Depreciation, let's say 8,000. Then what else?
Profit or loss is good.
Yeah, before that,
All that.
profit or loss is the last thing.
Oh, no, you can't do that much. Oh, right.
Trading. Yeah.
What is that?
What's the transaction? Yeah, what's the cross reference? No, not for the trading. Bank is not coming, but bank will come if we were selling in cash. Otherwise, if it was trading, no. you are trading with inventory. No.
What is another problem?
What if you sell
No, then we will have. Then we won't have van here.
No, what the like trying to buy.
No, then we are not going to trade in like inventory. We are not going to have trading account in the disposal. That will be in the inventory account. Right? Bank slash. What is it? If it was trading, no, not GST. When? Okay. Let's say 3,000. Then what do we get? So we'll have, what is it? Profit or loss, guys? Profit.
Lucky for so the big noise.
1,000. Profit on disposal of van. And then next one, we will have, what is it? Loss on the debit side, on the credit side. Disposal of van, but I won't have an amount because we can't have both of them at the same time. That's it, guys. Then it's over to you.
So I have a question. Like, it's like a non-accounting question. It's like kind of accounting. Do you like do depreciation for your personal good? Like your own car, you like depreciate it. Like reduce your